Oh, you can't tell, yeah. Good. Well, thanks for being here, and what a place. I don't think I've ever been in such an amazing building like this. How are we feeling?
I'm excited.
Good, yeah.
Thank you for inviting us.
It's almost too hot outside and too beautiful to talk about finance and crypto, but here we are. Gracy, Chen from Bitget. Tell us about what you do and where you're from.
Sure. So I run one of the largest centralized exchanges in the world by trading volume. We are a top 4 and 5. Depends on daily trading and according to CoinGecko and CoinMarketCap. And it may sound weird that I'm in this panel since I'm running a centralized exchange, while I'm on the Onchain panel. I actually self-volunteered. I told the Avalanche people that I really want to talk about Onchain, even if we are a centralized exchange, which seems to be the opposite of DEX. But actually, from this group, that later on you'll hear a lot about how DEX and centralized exchanges are working together, are hybriding, and I think that's also the trend. So that's why I'm here. I'm CEO of Bitget. I joined the company in 2022 as managing director, and I was soon promoted to be the CEO. So very glad to be here.
You're here for contrast, I guess.
Contrast, yeah. Compare and contrast.
Exactly. So Nicolas, Rémond, tell us about yourself.
Yeah, so Nicolas, I'm the CTO of SwissBorg, and SwissBorg is one of the European biggest crypto app, and we're running a hybrid model with transitions, trading on chain and trading on centralized exchange to kind of like bring the best of both worlds to our users. Definitely a DeFi mullet, and very excited to tell you more.
Good. Kanny Lee.
Yeah, I'm glad to actually have a centralized exchange here. Otherwise, the whole panel will be just a lot of thumbs up, thumbs up, thumbs up. So we have someone to beat up on. So don't
here to thumbs up
don't take it personal. Good afternoon. My name is Kanny Lee. I'm the founder and CEO of SecondSwap. We're a decentralized exchange where buyers and sellers come to trade the token allocations before it unlocks to the spot markets. We're really excited to be here today because we wanted to talk about our deployment to Avalanche and how we can help build sustainable liquidity for the Avalanche ecosystem.
Darius, Tabai.
Yeah, thanks for having me. I'm one of the founders from Vertex Protocol. We're one of the bigger perp DEXs in the space. We're currently operating across 9 different chains. And I think we're going sort of the other way around to Gracy. So she's a centralized exchange trying to get more decentralized, and we're a decentralized exchange trying to bring a sort of centralized exchange experience to users. So focusing on that speed and smooth UI, UX. And yeah, that's us.
Great. So Gracie, you mentioned this, there has been a trend towards decentralization in trading, towards DEXs. How do you see the future of DEXs versus centralized exchanges?
If we are mainly looking at where the users do the trading, whether it's the centralized exchanges, traditional order book, or the decentralized on-chain trading, I think this part is growing tremendously from the past 2 years. So data shows that at about FTX collapse time, which was November of 2022, it's only 5% of the total market share in DEX. And today, this data has grown to 20%, and I see this continue growing. So if it's like purely, we look at the trading mechanism, comparing order book and on-chain data, I think this is growing. But the thing that many of the panelists today pointed out, and also we are doing, including, Binance offered Binance Alpha, we offered Bitget Onchain. So all these products are also basically providing centralized exchanges users with the decentralized on-chain transaction activities.
They can have the best of both worlds.
Exactly. Yeah. So they don't need to self-custody, all the keys that they have and have a high risk of being hacked. At the same time, they have lots of opportunities and choices there in order to trade all those tokens that are not available on the centralized exchanges yet. If you look at data, for example, today, Coinbase, Binance, all those exchanges have about 200 to 400 trading pairs. We are slightly in the middle, which we have like 700, 800, while the other spectrum might be, Gate, Maxi, which have about 2,500 trading pairs. However, if you look at the world of, for example, Palm.farm, or even just Radium and all those other DEXs, they have a lot more. Palm.farm probably have a million new trading pairs every day, which I think is ridiculous. But we want to provide our users with enough choices and have the benefits of both worlds.
Doesn't this hybrid model make sense?
Yeah, so definitely it's like, you know, at SwissBorg we have a strong thesis that like the number of tokens is going to explode in the future. We're already seeing it. Pump.fun is an example of it. Now it's just that like Pump, you know, it's mostly about Pump and memes. And so it's just like purely speculative aspect. It's just that like, you know, if we want to see like the future with crypto, we're definitely going to have like a world where every company is going to have the token and come on chain. That's like what, you know, decentralized finance going to allow for it. And the idea with SwissBorg is that like you can get the deep liquidity that a centralized exchange offers with at the same time the enormous catalog and depth that like, you know, DeFi can offer, so that like you can have a mix of both worlds, and that's what we're offering at SwissBorg. So that like our users, they can get like a very smooth experience in our app, as like you can have as any kind of like mobile app, but at the same time have an experience where you can access everything that like crypto can offer.
Great. So Kanny, I'm wondering how you see the future of you know, centralization, decentralization in this new world that we're moving towards of tokenization, the tokenization of really everything. How does that change the dynamic?
Yeah, I would say maybe just hearing from our first two panelists that there's a lot of convergence. Some of the features that even Gracy mentioned is that most centralized exchanges have similar features. Basically, depending on where you live and where you sit, you're going to be using a certain exchange, but over time, you're going to see a hybrid-like features where it's all going to converge. You're going to have the same experience, but then where's the differentiation, right? You talked about tokenization of assets. I think in the future, there's going to be a lot of centralized exchanges that become the arbiter of taste. What gets listed, what sits in this exchange is controlled by the handful. I think where we need to talk more about is actually the innovation, skating. You know, the American saying, "Skating to where the puck is." I just came back from Canada, and there's a lot of hockey games going on during the Stanley Cup playoffs. But I think where no one's talking really about is the locked token markets. Essentially, every token in its life cycle, aside from meme coins, starts with a locked period where it's essentially sitting liquid, sitting at rest, before it hits into the spot markets. Now, trading those allocations is in 2025 is a $37 billion proposition that no one's really talking about. And to get to that, it's essentially going to deep diving into smart contracts and figure out how to get access to this deep liquidity that no one else has. And that's going to bring a new dimension to the tokenization of markets.
Darius, how do you see the combination of centralization and decentralization there?
Yeah, I mean, I think there's an interesting question around filter. You know, like Gracy mentioned, the fact that centralized exchanges have a sort of defined universe. You can't put everything on an order because it's extremely difficult to support the liquidity. Then you've got this long tail of assets on chain, and frankly, most of it is trash, right? So how do you, for the average user, filter? You know, centralized exchanges, I think, have genuinely tried to do that for their users to mix success at points, right? Because it's hard to be successful 100% of the time. But then, like, you have a highly degenerate gambling user set who are coming looking for the most risk-on, ridiculous thing, hence Pump.fun. Now, that's all the, like, casino part of the game, right, really? You know, I think there are other things to talk about. You can talk about self-custody. You can talk about verifiable transactions. These are all the things that originally were sort of crypto ethos and are a little bit lost. I do wonder if you'll see this sort of convergence actually where centralized exchange, it's already kind of happening, right? Where you have things like proof of reserves, where that didn't exist 2-3 years ago. I think you might see a convergence between the two, where some best practice from pure on-chain come to off-chain stuff, and maybe the on-chain stuff becomes a little bit more curated, so you try and keep the trash away from your users. It's kind of, I would hope for more of a convergence than bifurcation.
All right, so let's talk about tokenization, this world in which, everything, traditional financial products and even like real-world assets are going to come on chain. How does that change the dynamic of centralized versus decentralized trading?
I can go first. So the thing is that like when we're talking about tokenization, one element of it is that like you're going to be regulated and compliance is going to step in. So the thing is that like as a custodian or centralized model, we're already more into that path. Like we have more infrastructure and we're more used to that. And that is still like a model that like on-chain is still kind of like developing. So KYCing on-chain and having like AML regulation is things that like are still like figuring it out. So it's just that like now on the other hand is that like I do believe that like crypto is going to be the rails of finance in the future. And that like whatever we see on TradFi is being very inefficient, slow, with tons of intermediary. And I believe that like the crypto dream is still very vivid and on, and that we need to progress in that journey. And that's why, again, like with our hybrid model, we're kind of like at the moment capable of having our smooth operations and kind of like making all the complication of KYC and AML regulation smooth and still kind of like leverage in behind crypto rails. And so that's like a clear direction for SwissBorg and where we're going.
So Gracy, I mean, our crypto exchange is going to be a place where we trade all our stocks as well. Is that these places going to be kind of Uber trading vehicles feature?
That's a trend that we see, and that's something we are working at Bitget. So earlier I shared with our panelists the fact that, for example, Bitget is also working on how to onboard equities, which we just changed it to like tokenized equity. We've been doing that with money market funds, especially a lot. For example, BlackRock's Buildo is a very famous tokenized money market fund. We're working together with BlackRock and Securitize to bring that to our centralized exchanges users. And the trend that we are discussing actually nearly half a year ago with both Securitize, Superstate, and some other service providers there is that the tokenized equity, which, if you pay attention to centralized exchange landscape, you probably just saw Bybit launched something this, I think, Monday, which is giving users access to tokenized equities, but they don't serve the US customers because the license there is very different. So the two key thresholds or bottlenecks here for a centralized exchange to offer tokenized equity. Number one, who is the broker? Who does that tokenization? I mentioned Superstate and Securitize, but they each only serve, at least right now, like 10% of the whole U.S. stock market. They can't issue bigger names such as Apple, Nvidia, to make it on-chain because they're talking to those companies individually, and they haven't been able to onboard the big names. So who is doing that? And the second one is license. So if you look at the Bybit's case, they are more just like the introducer. People are still working, Bybit users need to open an account with MT5, and basically MT5 is that broker. So they need to onboard the users to another platform. But we're trying to see how we can smooth out that. But anyway, this is a trend that lots of central exchanges are using. So I'm just sharing some of the things that we are discussing internally. We haven't launched the product yet, but I think that's a very important trend that we are all working towards too.
So you're looking to launch as well?
Yes.
And I mean, if you need a license to issue that type of token shares, then doesn't that suggest that these platforms are going to be more centralized in the future? That would be how you would expect it to go.
Yeah, we are a centralized entity anyway. And for, so the question was asking about license and centralization.
Yeah.
So for us, that's why I separated the US market itself, because if you are just issuing this service to your global non-US customers, it's a little bit like a gray area that if we are just an introducer and someone else is acting as broker and they have the license in the entity, or sorry, in the jurisdictions that they register. In the Bybit's case, it's actually Mauritius. It's not a big country,
Right.
but since the third-party broker is registered there, and they just need a license there, and it's much easier to get licenses in, BVI, Mauritius, all these Cayman Islands, etc. So it's a little bit like gray area. We are seeing a lot more compliance in the U.S., and I think many other bigger names will come up with further regulations around that, and that's probably one of the reasons we haven't feel confident enough to launch the product now.
In the US?
Definitely not in the US, but not even in other parts of the world.
I mean, which markets do you think are going to be leading the way in that respect? Is that going to be the US now?
My suspect is still US and a lot more other countries like UK, where we are now, Hong Kong, Dubai, Singapore, etc. Like all those crypto hubs today that we see are probably just following.
Switzerland?
Yeah, so there are discussions, but at the moment it's still kind of like unclear on how to do. The European Union is working on the MiCA regulation that provides some clarity, but like at the moment, all the licenses are not there yet, and it's coming. So we'll see on how this unfolds for the next 2 years, but very exciting about what's coming up, yeah, for sure.
Sure, maybe let me offer a DEX perspective, because if you treat omni-asset trading as inevitable, it seems like every big exchange is trying to figure out the regulatory clarity, and it looks like it'll come maybe in the next few years, maybe tomorrow, who knows, with this Genius Act that's coming up. Maybe that'll knock away some of the digital payment systems and open up the door for more stable current regulations. But that essentially is the holy grail. Every centralized exchange says, I want to trade stocks. I want to provide essentially effective distribution to tokenized equities around the world. That's why we're tokenizing equities. If you ask people on this or Asia or Europe side of the world, you want to trade American stocks. I wanted to trade tokenized Apple, tokenized Google, tokenized Tesla, and then vice versa. An American might want to get access to European markets, maybe futures, carbons, agriculture, whatnot. That is the holy grail, but what's lacking is this distribution where it's actually permissioned. Gracie, you mentioned licensing. Licensing is the ultimate permissioned protocol where you cannot do something because you don't have the license. Therefore, I'm not even going to touch it. So that's your stopgap. But where decentralized exchanges come in is fill that gap in effective distribution around the world. So I think that's where you'll see more convergence in play, where you play in your role and DEXs play their role.
Do you think regulators are going to buy this distinction between decentralization and centralization?
Well, they're still wrapping their heads around centralized exchanges, so I think there's a long way before they get there, but effectively the world wants this. It's something that every consumer wants, to have that omni-asset trading, because again, if we treat it as inevitable, then the regulators will try to figure out how to regulate this and how to provide protections, how regulation and KYC, things like that inside of this, but it's going to be years away.
Darius, I'm interested, do you think companies in the future will issue shares, or will they just issue tokens?
I suspect, given the corporate protections and the way capital structures work, equity's always going to be like a preferred mechanism. But the point where you tokenize that equity, you add a lot of efficiencies. I mean, everyone here spoke about bringing equities onto blockchain users. I'm actually kind of interested in blockchain going to equity users, right? So tokenized equities for me is more of a like Trojan horse into how the traditional financial system works, right? Right now, there's a big gap between, say, Bitget or Vertex or SwissBorg, SecondSwap, and say the CME, NYSE, London Stock Exchange. But the point where you tokenize, what you bring in is a more efficient settlement system. Now, that sounds extremely boring. I bet anyone that's worked in TradFi, I was working in TradFi for 20 years, settlement's amazingly manual, and you move in collateral over bilaterally. There's a lot of credit risk. You can't secure it. There's no rules for getting it back. It's a mess. At the point where you put it on chain, you apply smart contracts, hard rules, even within a permission system, yes, you lose some of the aspects of openness, but you create a lot more efficient system. And if traditional markets are ever going to be 24/7, which I think there will be demand for in the world that we live in, they will almost have to be tokenized and on-chain. And that's the real Trojan horse, right, is where then the banking system or the traditional settlement systems get worked around, and now everything's on-chain and working, and that's pretty exciting.
Yeah, I was just about to say that, like, I do believe that traditional finance is coming on-chain, but I also see the other way around, because if you look at, like, I don't know, any kind of company that, like, I don't know, you take Air France, for instance, that is going to offer miles to their users, that's basically just a utility tokens, right? And so it's just that, like, it's very difficult then to manage and to create, and you need a lot of trust, but you can also see that, like, well, everything around, like, fidelity for customers and things like that can just be done with utility tokens, and we can see a lot more of traditional businesses adopting utility tokens and offering that. And that's the other way around. It's crypto coming to traditional businesses.
Just to share a bit on that point, if you look at MicroStrategy, it's such a great innovation that everyone is talking about, especially in traditional financial world. I saw Michael Saylor a few weeks ago in the US, in New York, and also he shared a few interesting data. For example, end of last year, there are 75 public companies in the world, including US, Canada, Japan, etc., that holds Bitcoin as part of strategic reserve. And in that particular event that I saw Michael Saylor, well, it was actually an investor day, and it's tailored to all those US TradFi investors who are interested in looking at how their own company or their own portfolio can add not just BTC, but also Ethereum, Solana, Aptos, all those tokens into their balance sheet and to be part of their strategic reserve. I think that's just another trend that we'll see a lot. So both way.
Definitely seeing a lot of those companies. We have 5 minutes left. I did want to get into AI a little bit. So how does AI change on-chain trading, and how does it improve the experience, the user experience for the customer?
Yeah, typically, I mean, like talking about SwissBorg, you know, we're just saying that, like, okay, there is like traditional finance, and then on centralized exchange, we have deep liquidity on majors. I would say majors in crypto, like, you know, we all know the tickers, we know the projects that are behind them, and traditional finance, the number of stock is limited, and usually we know the company. But now, when we look at pump, you know, we're talking about like the incredible numbers of tokens that are going every day. And generally in crypto, it's a wild, wild west in a sense of like anything can happen, and as such, everything is happening. But then getting like the signal versus noise is very difficult. And this is where, like, at SwissBorg, we're investing a lot, is kind of like, where can we find the signal and analyzing this at scale? And there is no other way than like relying on AI, because there's such a quantity of data that crunching that and figure out like the signal coming out of it is extremely difficult. And it's something that like we're leveraging for our users to give kind of like more information about what's useful and assisting them in their path of wealth management and figuring out what makes sense, and then automatizing a lot of things for our operation and making things scale.
Trading agents?
Yeah, trading agents. So we provide AI trading bots to our users. We also use AI to select tokens for listing, not just on the centralized exchange main spot market, but also the on-chain part. And we, as a centralized exchange, have like lots of customers that we need to do customer service. We need to translate lots of languages because we serve more than 100 countries' users. So all these scenarios, we use AI a lot. But honestly speaking, I think AI is like teenager sex. It's a bad joke, but basically everyone is talking about it. Everyone thought they know how to do it, and everyone think it's a sexy topic, but no one really knows, you know, the ultimate goal that AI can achieve. So we are all exploring.
Teenage sex?
Yeah, wow, this is a good segue, huh? I have 3 daughters, so this is going to be awkward. I hope this is not recorded. But let's start with the fact that I guess the reason why is no one talking about it, right? Because if you're successful at this and you're applying some AI bot that's working, you're not going to talk about it, especially when you're doing on-chain trading where there's a mix of signals that are coming across in multiple ways. But I think it is pretty effective. I know some teams that are building really, really good models on it, but over time, you'll see it fizzle out because the alpha has been lost, because that trading has stopped, because everyone's seeing the same thing. So what's your real edge? One of the edges that we're seeing at SecondSwap is that on the locked token markets, it's very transparent when you look at smart contracts, when the unlock period starts, how much impact of circulating supply to tokens come online. Very, very clear. You see it on the smart contract, you have a price predictor, and then, well, if it's 1 million tokens or 3 billion of tokens of Solana, which unlocked March 1st, is it going to hit price? Yes, it did. It hit price exactly. It dropped Solana down to about 110, 120, and you saw that immediately. So you could have traded the market. You could have used that impact too. But what's more effective is that actually taking this plus sentiments plus other sort of other factors and mixing that in and saying, when is it going to rebound? When is it going to trade? Is the smart wallets dumping or they accumulating at these levels? So that's been proven pretty effective on-chain trading for the locked token markets.
Yeah, I think my interest is a little bit more mundane. I think AI is just really good at simplifying complex problems. And complex problems in on-chain stuff is bridging, wallet UX, getting a token on a random exchange. And AI can be very good at doing that for people. I think given the liability for hallucination, you still got to be careful. So the use case is small, but it's growing, and we see a lot of people doing it in our space. I think it's just going to get more and more, given the native aspect to on-chain and everything else that's going on.
All right, we've only got 30 seconds left. Gracie, any final thoughts?
Teenager sex. Fun thoughts. I guess prediction, I think Bitcoin will reach 1 million in 10 years, if not 5 years. Hopefully it's a fun fact.
The share of DEX trading on SwissBorg has been on the growth. We're at more than 10% right now, and I think that we'll reach 50% within 2 years.
Prediction, Kanny?
Yeah, I think the secondary markets are going to take a big shine in 2025 and begin in 2026. There's just more and more tokens, more and more people launching tokens, and they're all hitting liquidity at the same time. So there's going to be tons of tokens, a flood of tokens. Something has to stop up this liquidity. So we need to build up a sustainable liquidity model for retail to come back and alt-season to come back for us to be successful.
Final thought, Darius?
Yeah, I think you're just going to see more and more of this convergence between traditional markets, crypto, on-chain, off-chain. All these distinctions are going to go away, and just the best practice in each is just going to become optimal. You're going to see these sort of super apps rising.
Great. Thanks to the panelists.
Thank you, Benjamin.
Thank you.
Thank you for having us.